Joining us right now to go through these numbers is Strategic Resource Group Managing Director Burt Flickinger. And Burt, it is good to have you on the program this morning. The numbers look better than expected, even if just by a penny a share. What do you think?
Penny a share better, especially since Target, Maria, is investing so much more in price. So the units are up. Dollars are still up slightly. As you referenced, the plus 5.5% in the same store comparisons is phenomenal.
Well, the comp store sales,
yeah,
let's talk about that, because the comp store sales are up 5.3%. The estimate was 5.1%.
Sensational, especially compared to the department stores, which have been negative to minus 5, minus 7. You mentioned L Brands earlier. So Target, really good year and a lot of momentum going forward, especially on today, Investors Day for them.
The investment Target is making over the past 2 years, really, both in stores and with their e-commerce, has been enormous. But that's been a challenge, as you said. That's compressed margins a little bit. Investors haven't liked that. But it seems like we're starting to see that pay off a little bit in terms of revenue boosts, and now even in the bottom line number.
In the bottom line, they've invested technology, as you've referenced, Brian. They've invested in better fashion, more food for foot traffic. They're also the sustainable ESG leader nationally in solar. And our survey work, particularly in the high-tax states, shows that 23 to 35% of consumers will switch a majority of his shopping to the solar leaders. And Target is really a quote-unquote eclipsed everybody on solar.
So when you look at the overall retail landscape, people like Target have been able to compete, and Walmart also, with Amazon. And it seems like the people winning in e-commerce and innovating are the ones that you're seeing their stocks actually do well. Is that what you expect to continue to drive the retail stocks going forward? Because there's a definite bifurcation between, like you said, the department stores and some of these discount retailers.
And Lindsay, exactly as you referenced, the other thing is Brian Cornell and Target board have substantially improved their leadership team, more diverse leadership team of probably any major retailer anywhere in the world. So with the diversity of thinking and better leadership from the stores to buying, merchandising, creates much better results and a much stronger consumer connection.
Look, the forecast is also pretty good here. The forecast for the first quarter and the year. Let's get back to Ashley Webster here, because there are more headlines in terms of comp store sales and the predictions for the year ahead. Ashley.
Yes, but the year ahead is pretty much in line, Maria, certainly on the earnings side. Traffic was up 4.5%, and the digital sales, as Burt Flickinger was talking about, the online business, up 31%. You know, this is a company who's revamped their supply line. They've do same-day delivery in some locations. They've even opened some smaller stores in college towns. And this online pickup and delivery has really started to pay dividends, as, of course, they take on Walmart and Amazon. But up 31%. I'm sure Burt is impressed with that.
I'll add to that, Ashley. In 2018, comparable digital sales were up 36%. That 5.3% in the fourth quarter is overall comp sales. Same-store sales were up 2.9% in the fourth quarter, excuse me. But Target is saying it's got its best full-year comp sales growth in more than a decade, which is pretty incredible turnaround for a company that was, quite frankly, flat on its back after that data theft, the registered data theft a few years ago.
Yeah, back to your point, Dagan, the Alberto Gonzalez data theft in 2007, and then the other one about 8 years later. And as you and Ashley referenced, Target was really dead leadership for about 15 years, the last two generations of CEOs. So a really dynamic team, especially facing a consumer that's more debt constrained than ever before. And as Lindsay referenced, a lot of tough off-price competition. Target's still winning. A real credit to their overall team, from the stores to the corporate offices.
So the stock is up 3.25%. Does this tell us anything about the broader retail environment? Tell us where you're seeing the strength and weakness right now. It is a little bifurcated still, right?
Still bifurcated. We're seeing this strength in off-price price impact, as you referenced earlier, Maria. So it's Walmart, Costco, BJ's Wholesale Club, and especially the discounters, Burlington, TJX, Ross, and Ollie's.
Let's talk about the other retailers, because if you look at the overall economy, you said that it's the discounters that are doing well, but you have, something we talked about yesterday, the Gallup poll on Americans' optimism about their personal finances. it's climbed to levels not seen in about 16 years. 69% of those polled by Gallup now say they expect to be financially better off at this time next year. So why is it just the discounters? Is it the higher-end retailers just can't get it right in terms of digital? Is that what's going on rather than a reflection of the overall economy?
Really important points you're bringing up, Dagan, in terms of consumer confidence and the disconnect. And what we're seeing is a lack of investment. So there's much more digital in South Korea and across Asia, and those stores are doing better. The London stores, Selfridges, Harvey Nichols, particularly Harvey Nichols with digital, doing extremely well. And that's the big miss for U.S. merchandising. Traditional Maginot lines of retail, but they haven't really digitized the stores to make them exciting for student shoppers and people entering the workforce for the first time. But you're right, consumer trends in terms of the Gallup poll provides some good news in an overall tough retail ice age over the last few years.
Burt, is this 31% online sales growth number that impressive to you? I mean, we look at Walmart, they're more in the 40s, I think. So actually, I look at this number and I'm saying, is Target doing better in terms of catching up, or are they lagging here? And this, we really shouldn't be impressed with
what have
that
you done for me lately? 31%?
But compared to the competitors at 40, I mean,
it's a combination of the two, Brian. Target's online sales trailing 12 months going into today, we're up $1.5 billion to take sales from about 4.6% of total to about 6% of total. When America total online sales is about 12, Target, to your point, is about halfway where it should be, but the momentum's going in the right direction.
All right, we will leave it there. Burt, great analysis from you as always. Thank you.
Thank you, Maria.
Burt Flickinger joining us there.